Thanks a lot, Nicole. All the sad faces here, guys. I'm going to introduce the pros and pretend that they're smiling. Jonathan Honeck is back with us, founder of CapitalistPig.com and a Fox News contributor. And I didn't think you could outdo yesterday, but you did, my man. You look fantastic.
Happy to be with you,
Mr. Vegas all the way.
Thank you.
I think maybe you could play some music or something later on.
You're always so stylish. I got to do whatever I can.
You blew me away, though. You blew me away. All right, Jim Frischling, president of NewOak Capital, is here. A little bit conservative, all things considered. And Lindsay Pieggs is with us, a chief economist. You know, Jim, here's the thing, and Matt brought it up. There are areas that are crumbling that you just scratch your head. Why? Outside of retail, nothing is acting the way you think it would act with cheap oil and cheap gas.
You know, given the consumer sentiment that came out, better than expected, best we've had in years, you would have thought there are certain sectors, and some did, that would have been treated better. I actually, you know, maybe people aren't paying attention to it, but Chinese factory production orders down well below expectation. Lindsay's talking about the global economy, talking about a slowdown. There was just another factor.
But why do we believe Chinese numbers when they're bad, but don't believe when they're good?
Well, I guess it's kind of, it is
Believe the market, and Chinese stocks have gotten their butt whooped for months now.
Jim, you brought this up before. Most people that I know. In addition to playing it, you know, making money off of it, what are the implications for the economy when we see this, particularly for corporate America?
Sure. I mean, first of all, as you were highlighting, the junk bond market now, 16% of the issuance has been in the energy space. And that's the bond market. There's also the levered loan market, which is really a lot of product that either is being kept on banks' balance sheets or has been put into different structures. The fact is, these guys are getting hurt, and these are levered plays on somewhat marginal companies. And actually, my head of high yield looked at this and said, it's not as big a concern as I was thinking, because he thinks the maturities actually are not near term, meaning these guys owe money, they're not making money, they're going to have interest paying back their debt, they're going to borrow more expensively, but their maturities actually are quite extended, in which case if oil were to pop, these guys are not going to get as hurt as they thought. So
if oil pops, what if oil goes to 40?
We're going to clean out marginal players because banks have a lot of loans on their books to these companies. They're marginal companies. It's almost a .com-like.
Yeah, that scares me.
Yeah, because these guys have borrowed money betting on U.S. shale, and this price of oil does not allow them to
the economy?
Unless you need to take tax losses for some reason and ride it through, because what you're going to try to do is get too cute, sell them here and buy back in January, and typically you buy back at a higher price.
Jim, would you agree with that? Oh, by the way, let's say you're not in oil at all. Any oil stocks, they look very attractive here. Although I will tell you, we've gone through that phase when they first started falling. All the tweets and emails were like, Charlie, do I buy? Do I buy? Till now people are like, I'll never touch it.
So now it's front page news, which maybe is a bullish indicator.
That could, contrarian thinking, could be a buy signal.
A number of ETFs I'm looking at, down anywhere from the low 20s up to almost 40%. I think it's up to your risk tolerance. I think if you actually want to start getting back involved, I believe you will get paid back. However, I don't recommend catching a falling knife. I wouldn't mind missing some of the upside and getting a little later. The only thing I want to say to Lindsay is, you know what solves low oil prices? Low oil prices. Because if it gets too low, they leave it in the ground, and they're going to drive the price back up. So right now we're going to kind of working this out, but low prices will solve for itself because they're not going to drill it.
Right, and not to digress too much, which gets us back to the original question I was asking 3 or 4 weeks ago, the motivation of Saudi Arabia, you know, and whether it's an indirect war against Iran, you know, breaking up OPEC, hurting American drillers, whatever it is, you even believe that they will have to blink sooner rather than later. Jim, Ryder's systems, you know, Ryder's held up pretty well since you've mentioned it. You said it's a way, you know, listen, America started doing better, the economy. Lindsay, if we have more than one good month of good economic data, maybe people will start moving.
5, 6, 7.
5, 6, 7, just in time for the summer. Hey, I'm going to get in a Ryder truck and move from New York to where they have no taxes. Up 4%. Do you like it here, particularly maybe it's a play on cheap gas?
I do. And at the time, it was a pick on kind of on America, on the improving economy, favorable pricing trends. Now I got cheap gas. Now we got some spending bill issues of letting people drive trucks more hours. So I think they're in the right place, selling the right services, and they actually have an uptick in their used tractors and trucks. So again, I still like it.
All right. Like I said, a long time ago, I said that she probably is going to be the candidate. I think she could beat Hillary. She was the clear winner last night. And for me, that's a very ominous sign for the stock market.
I think we should remember this day, or rather, that's that comment, because it's a pivotal moment. And when she runs, we're going to say this was the turning point, and this was also a big boost for her. She has 2 issues. One is she doesn't like the president's nomination to the third-ranking Treasury position, thinks it's too incestuous with Wall Street. And 2 is the Dodd-Frank and sneaking the derivatives business back in. She's adamant this is
you know, Jim, how does that make you feel?
You know, for those that are in the market, they looked at portfolios and they're at all-time highs. For those those that are they watch their homes be appreciate again. They're feeling a little better about things, and I think that's feeding the sentiment. You got a little extra money in your pocket because gas prices came down. So again, feeling better. Now I think we're talking about the slowdown in demand for oil and maybe a little bit of caution because people are saying, wait, am I misreading this sign? But to your point, Lindsay, the stock market isn't the economy. The economy is not the stock market. Wall Street's getting hurt on this oil story. Consumers are getting helped by cheap gas.
All right, we talk about. Here's the thing, though. What do they look at anymore, Jim? Because the official mandate, inflation and jobs, now includes the housing market. She's mentioned on more than one occasion the global economy. You know, I mean, is she going to determine our interest rates because Germany's a little wobbly?
The responsibilities the Fed is taking on are unbelievable, and it's not just jobs and inflation. It seems to have expanded. I just want to say on the bond side, near term, it's a flight to quality, and it does show some concerns on other asset classes. However, I think it might be justified given the falling price of oil. Inflation is muted, so rates bond yields should do well.
Right.
I mean, they should stay low.
But it's not deflation beyond oil.
Exactly.
All right. Hey.
I was reading about the hipsters buying it. I actually have a turntable that we got at home very recently, and then it said hipsters are owning them and not using them. And I'm like, I resemble that remark. I actually.
I mean, it's so ridiculous.
And here's the thing, Jim. The Fed is in a position where they have to justify their existence. So you got to say things are getting better. I mean, you took on all of these risks, but also you buy themselves time. I always find that to be interesting. What do you think is the most important next?
I was going to give Lindsay another one. In addition to the Fed, the European leaders are getting together for a 2-day summit, talk about the region, things that actions they should be taking, and particularly some geopolitical concerns about Russia. So I think it's an economist's dream next week. You got the Fed and you got European leaders all getting together.
Jonathan.